Hey guys, what's going on? It's Russell. If you're new to the channel, make sure you subscribe because we do just tons of different stock alert service reviews. We look at services that alert options, we look at services that do longer term stock picks, and everywhere in between. So today I want to talk about Andy Snyder and the Manward letter. So this was first brought to my attention by my friend Mark last year in 2020. Mark went through and reviewed a lot of these different lower cost, hyped up investment services or newsletters, and I thought I would share some of his findings with you and just discuss this type of investment newsletter in general. So it's never been something that's interested me that much. I think I'm more of a stock trading, like short term stocks, technical analysis type person, but Mark decided to look up all these different investment services, and part of that is the marketing, and we'll talk a little bit about that in just a little bit. So, just to give you a quick introduction, Andy Snyder used to work at the Oxford Club, which is this massive part of Agora Financial, or whatever they're called, this huge, $1 billion company. So, it's an entry level newsletter. It's only $49 for the first year, but it does renew at $250 the next year. So, it's done by this guy called Andy Snyder, and it includes things like monthly reports, special reports, updates, and a whole portfolio of different stocks and assets that are, in Andy's mind, going to be massive potential gainers. So Andy Snyder is an investor, serial entrepreneur, and he founded the Manward Press in 2016, I think. Now, they do offer an amazing refund, 365-day full refund guarantee, which is the best I've ever seen, the best that Mark's ever seen after reviewing a bunch of these things, which is awesome. I don't know if anybody's tried to claim it, though. You never know when you go and try and claim these things what they're going to do. My guess is they probably try and upsell you. That's, if in doubt, these things always try and upsell you. So I'll leave a link, by the way, in the description so you guys can go and check out this article, but also go and see for yourself what this guy has to offer. So this is what Mark had to say about the Manward letter. Death of Cash is a new subscriber packet. So it's all about crypto, really, which is pretty cool if you're into crypto. He did like the writing. It's uncluttered, it's accessible, and it's interesting. And the website is clean, crisp, well organized, and user friendly, which I'm sure their marketing department makes sure of. Let's have a look. Now, this isn't so good, right? Poor stock portfolio performance. If you're joining to kind of copy their stock picks and hold a portfolio over the longer term, this is pretty damning, right? I mean, you don't want that. It does have a lot of entertaining reading about it, so it's not just about picking stocks. You also get a lot of really cool information on upcoming IPOs or tech revolution-y type stuff, but it's all extremely speculative. So it makes fun reading, but it may just never come to be, a lot of these ideas. And he's not the only one that does this. There's so many of them. So that's also not great. Little explanation of how the stocks are chosen. The big reports I've seen, they do tend to go into all the details, so I don't know quite what to make of that, of Mark's opinion on that. Here's what you get for the $49. You get digital delivery of the monthly, so it's a monthly newsletter. You get all these special reports, and they all have crazy titles, like all these things. As I dig more and more into this industry of longer term speculative stock investments rather than trades, you find they all operate in the same way. They all have these really enticing titles, like this is the next $1 trillion company, or we'll never use cash again. This is how you can protect yourself. All this kind of stuff. So you can see that's reflected here as well in the special reports you get with Snyder stuff. Here we go. 2 ways to capitalize on legal cannabis today. The #1 investment in America for under $1. Web access to years of issues, reports, updates, and portfolios. The problem with this is great, except when you go back and have a look at what they actually were talking about. And I'll show you in a few minutes one example of what they were talking about that just hasn't paid off yet at all. So, like I said, there's tons of other similar newsletters. One of the most popular is Near Future Report, and I did a video on this that you can check out on this page. Near Future Report is the same style. It's by Jeff Brown. It's $49 for the first year, or $97, something like that. A very low price, and it entices you in with all these promises of riches and getting in there really early before everybody else gets in with these new tech companies and things. And that brings me to one of the most important points here is marketing. So this idea like of fear of missing out or FOMO marketing, it's just so rife throughout this industry. In particular, these very stock picky like investment newsletters. So this idea that what they do to get people in is they just have some really, really catchy headline. So this one, for example, is in pushing cryptocurrency. And you can see here is, do not buy Bitcoin because these 3 next gen cryptos could be even bigger. If you missed the first wave, this is your next time to, your next chance to get it. And then you click on it and you basically get led through like all these teaser videos. So you can't skip ahead. The marketing they just start sending you tons of emails. It's always something really amazing that sounds great but isn't always that great. So before I continue with what Mark found with the some of this other stuff, let me just show you one example. So I found this video. It's basically a guy revealing what the 6G stock Manward Press is teasing. So he basically put this big ad up saying like, this is the next thing. If you think 5G is good, look at 6G. And you have to sign up to get this thing. And this guy kindly revealed what they are. And one of them is Telesat. So basically you can see what happened over the last year is it just went down. So if you bought this thinking that you were going to be part of the next big revolution, a year later your money would have almost been cut in half. So and that seems to be Mark's experience with the Snyder report, in that nothing's worked out yet. They're all down, a lot of them. The problem is though, you can't say like, oh well, the idea was wrong yet, because there's no given timeline, right? This 6G revolution or this new particular crypto company or whatever, it's like you're left hanging. You don't know whether things are working, because if you were to ask Andy Snyder or one of these guys and say, well, you got to give it more time, this is like you're positioning yourself early kind of thing. So looking at the portfolio like Mark did and seeing that they're all down, or a lot of them are down, it doesn't necessarily mean they won't work out, but it also means that you can't really backtest anything, because not enough time's gone past for most of the different things that are alerted. So anyway, he is a serial entrepreneur and he has had 100 billion in assets under management apparently. He is very outspoken. There is a lot of fear mongering, it feels like to me. Just kind of like very contrarian positions. So if you like that sort of thing, you'll love the Manward letter, I'm sure. And same with Jeff Brown's stuff on the Near Future report. And like I just said, Mark says that the Manward letter portfolio is underperforming. I'm not surprised at that. Like I said, I've been part of some of these other investment services and they all seem to be underperforming. They draw you in with this hype and then you go and you buy the thing and you look back and everything's like 50% down. So I think we covered that a little bit. Mark didn't want to actually put any of his capital into the stock portfolio. And honestly, I don't blame him. I mean, if you're going to do this, you have to be in it for a really long time and be prepared for most of your stuff to fail miserably. Kind of like startup investing or angel investing kind of thing. So let me see. What is the investment strategy of the Manward letter? To me, it seems like finding companies in new sectors that seem like they're going to grow massively over the next few years. But let's see what he has to say for himself. So the modern asset portfolio is a standalone mid to long term portfolio. Like, what do you consider long term? For me, that's like 10 years. So that would explain why most of the things haven't done much or have gone down in the last year. So let me see. After all, interest rates dictate where our money will be treated best. That's why gold and companies participate in share buybacks, both assets, blah blah blah. To focus on the largest macro ideas, the modern asset portfolio must be the centerpiece of our investment philosophy. Correlation-based diversification. This helps us build a safe, dependable portfolio. Think of our modern portfolio as the engine that creates the locomotion. It's where the power comes from. The quicker pace strategies are like turbochargers. Alright, well, moving on. So Mark had a look at the different portfolios. This looks like a repeat. I don't know what's going on here. Here we go. So the modern asset portfolio only had 5 stocks when Mark looked at this. 4 companies he's never heard of. All 5 stocks are in the green. That's not bad. So the current portfolio is for stocks purchased Here, the buy ranges, so these are the types of prices, and all 5 stocks are in the green. Small cumulative return is $74. That's not too bad. I mean, sounds like the modern asset portfolio is just doing fine. I mean, if you're not deeply read on it and they're supposed to be longer term buys, that's alright. So let's see what else he has to say. The second portfolio is called the long short portfolio. It's built around the belief that although things do not look good for the American economy, there may still be potential hidden winners. Okay, so it's more risky. The current portfolio has 3 stocks, 2 are slightly green and 1 is red. The total cumulative return is $14. So to me, this isn't actually looking as bad as maybe I thought. Like, it sounds like the first 2 portfolios are pretty much break even. So not too bad. So let's have a look. So this is what Mark had to say about the $49 subscription fee. $49 is pretty much nothing, right? The problem is, if you're getting bad advice for $49, you're going to lose a lot of money or have a lot of capital tied up that could otherwise be used for more productive endeavors. So Mark said he's not going to buy them because he just doesn't feel comfortable enough. So fair enough. Maybe it's something you guys like, maybe it's not. I'm not going to invest any money into this thing. I looked up the 6G stock stuff. It's pretty good, but like I said, nothing has happened with these companies over the last year. You can go and find out more stuff about Andy Snyder on YouTube as well. A whole bunch of stuff there. And yeah, so the bottom line here is, if you join this, you're going to be bombarded by upsells and emails. You're going to be on all sorts of mailing lists. I would say that it's something that I'm definitely going to avoid, but maybe you guys would like it. Alright guys, till next time. Cheers.